Hello everyone, this is Alexandre from Gains, and today I am joined by Denko from Reef.finance. How are you doing, Denko?
I'm fine, thanks. Thanks for asking. How about you?
I'm great. I'm excited to learn more about Reef. Could you present yourself quickly before we get started?
I'm Denko. I'm CEO of Reef. I have a tech background. I started programming in early high school. I started with C++. I did algorithmic competitions for a few years. Then I moved into the enterprise world. I worked for two companies who were providing ERP systems. I built some modules and some mobile apps for them, which are still used to this day. A few years later, I moved into healthcare. I worked for one of the biggest healthcare platform providers in Europe. They basically their platform is powering like Russia and Sweden and a lot of like big countries. I was there for around 2.5 years. The last 6 months, I was leading a team and we were working on a complex app for healthcare data modeling around the OpenEHR standard. We also did like a lot of real-time data processing, and those things are still in production. They're still stable. They're still used by many hospitals. Around 5.5 years ago, I discovered crypto through a friend. I went on a meetup, and then he got me into it. I started blockchain development right away. My first experience was with NXT, which then turned into Ardor, and I also started a lot of Solidity development. I saw like how the ecosystem like slowly matures. I did a lot of Solidity, but I also did BitShares, Steam, as well as some EOS. Those are all the different blockchain technologies that I have experience with. I'm based in Slovenia, in Ljubljana. The development community here is not super big. So like everyone knows everyone. We figured like on different projects we were working with people that we already knew from some other projects, and around 2 years ago, we teamed up and we started working together on blockchain projects as well as analytics projects. What happened is like we worked as a team for multiple like blockchain projects. Some of them like were enterprise blockchains. Last year, we mostly did analytics, mostly did like B2B. So we helped crypto funds as well as traditional funds who wanted to create their crypto fund and onboard their already like existing clients, their already existing like family offices. So we did a lot of research for them. We provided some long-term signals for them. We basically kept building our analytics engine. It's been like over a year and a half. And through those services, we were able to basically sustain ourselves. We had certain income, and that's how we kept developing it. Around November last year, again, through our analytics, we were collecting a lot of data from social media to blockchain traffic to exchange data. We discovered the interest in DeFi. Us being having like fintech background, we decided to fully focus on DeFi. Around January, we started working on Reef. We iterated on the idea multiple times, and yeah, since then I've been basically working on Reef full time.
So, we're going to talk about Reef in a minute, but just something that came to my mind. You have a very strong technical background, right? But the best tech doesn't always win. So, you need to get users, you need marketing, you need PR guys. My main question is who's in the team and who's going to help you on the non tech side?
Let me tell you first our experience with just building tech and basically ending up nowhere. Usually developers and everyone basically who are comfortable in their area, they just start right away with their skill set, and they don't even think if this is the first step that I should do. And I think for developers, this is the most obvious. When we have some idea, we just start developing it. So there is no like certain validation, there is no certain research of competitor analysis. There is no certain like product market fit research. Like why would people care? Then what happens is when you start working on it, you get invested with time, as well as the more time you put in it, you're like also have certain emotions about what you're building. And then you kind of fall into this like delusion that people will come, and you just keep postponing the launch. You'll be like, I just need this feature, and then everyone will just jump and start using it, and it's going to become a unicorn and whatnot. So what happened over these years, we've had like experience with multiple startups that do like B2B as well as B2C as well as our own. We've worked on different techniques. How can we validate what we are outputting? So initially, yeah, it's like an idea, but you have to see if first the market needs it, and then if the market wants to use something like that. And then you have certain mechanisms how can you create some form of a feedback loop with your client. You have to create some form of a gateway to communicate with them one way or another so you can hear what they want from your product. Throughout the years, we've been improving on those techniques, and we are basically taking all of that experience into Reef. The current landscape wants a certain thing, we're delivering that certain thing. But in case the people want something else, like some other feature or some different direction, we have the experience to be able to shift into something new quite fast.
What you're telling me is that you've been speaking to a lot of people in the crypto space, maybe you've conducted surveys, and you've made sure that what you're building at Reef is something that people really want.
Exactly. Yeah, that's the case. And one of the biggest complaints was always like the high technical barrier of entry in crypto and the complexities, like how people have to learn all of these words. Why would they have to learn all of these words? Not just direct talking to people, but there is like a parallel kind of this industry, which is like the traditional financial industry. And you can compare how it evolved over time, especially the trading of stocks and the banking sector, how the mobile apps that the banks were providing were super complex and people didn't want to use them. Now it's like a simple QR code. So all of those things are like some form of like a parallel of what should happen to crypto. So all this fragmentation is something that people kept mentioning. Why should I have another extension? Why do I need this? Why do I need that? All of this feedback has to be incorporated and is being currently incorporated into our product.
And regarding the second part of the question, who's helping you on the non-technical side? And more generally, if you want to present your team quickly, you can do that as well.
Sure. We are over 12 people. Currently, like more than half of the team is engineers, and we are still expanding. We have 2 interviews a week. We want to pick like the right people. Regarding the non-engineering team, we have business development as well as marketing presence in both US as well as Asia. The team had experience with many projects in the past, so they know exactly how this landscape works. They're not, some marketers who just came from the traditional industry, because this landscape has certain mechanics. People have certain expectations. There's certain, way of doing things here, and everyone has a crypto background. They're super experienced. The most important thing is like they don't have to be pushed. They don't have to be taught. They have like this self-initiative, which is super important in crypto in order to be able to move fast. Like we must not run our company like a corporation. It must run as a startup, but everyone needs to know like their role. And so far the marketing and the business development team have been incredible. When someone is productive and they know exactly what they're doing, it feels like one person is like 3 people, because there's just so much output. I'm super happy with the team, and now we are also onboarding new community managers as well. We have to pick which one we are proceeding with. Yeah, so that's regarding the non-engineering team.
Cool. Well, that's great to hear because, as you mentioned, that's very important, and it also allows you and every other person to really focus on what they're doing, and so that you don't have to cover for someone else who doesn't really know what his or her job is. Please tell us what's Reef Finance.
Reef is the first DeFi cross-chain operating system. It's powered by Polkadot. I have to tell you exactly like what it is. I would like to first go from the other side and let you know like how we came to this point. Like it was not just an idea that was incubated without like the external world. We iterated on this idea. It took few iterations because we're always thinking, okay, this might not be what people want. This might not be enough. And we just kept talking to people. So the idea came from the current challenges that the landscape is facing. We face these issues as well. Certain idea is best when you don't just assume what the problems are, but the idea is can become even better if you actually face those problems yourself. So the current landscape has 3 problems as we see. The first one is the liquidity problem. You have centralized exchanges, and you have many of them, and they're completely isolated. They're prone to hacks, and they're like isolated silos of different users and different liquidity, different coins. Second, you have decentralized exchanges, which are doing great, but they have unstable liquidity. They're slow, they're hard, they're kind of expensive due to the Ethereum network congestion. And additionally, neither of them integrate directly into the DeFi ecosystem, at least for now, especially the centralized exchanges. And the second problem is the yield problem. People want to participate, but there is like a high technical barrier of entry. When users come to the landscape, they're confused. They don't know where to start. There is no like structured way what they have to learn. They don't know the names of the projects. They don't know anything. It's like a very, very high barrier of entry. Most importantly, they cannot stay safe and well diversified. So, they are still like affected by the marketing a lot, and they cannot make like their own decision, and they should not have to make fully decisions on their own. So they need certain help. Additionally, due to the Ethereum's gas fees, they cannot participate in the different activities because of the gas fees. Certain activities were like $50 at some point, they were $140. So for the average investor, this is definitely a no-go. The third problem is the fragmentation problem. So participating in different activities like lending, borrowing, yield farming are currently fragmented and painful experiences. You have to go through 5 different websites, have to link your wallets, have to learn how to use different UI. It's completely confusing because the UI is made from developers, and developers are not super UX friendly, and it's overwhelming. You have to learn all of these things, and while you do this, you are missing out on the available opportunities. So with Reef, we aim to solve these problems. After I explain to you what exactly are the components that Reef is comprised of, I can tell you like how they work together and why we call it operating system. Reef is comprised of 3 main components. The first 2 components are infrastructural components. Those are components that happen in the background. They're deployed on the network. Like the user should not care what exactly it is. Third component is the component with which the users interact. So the first one is a global liquidity aggregator. Second is a smart yield farming aggregator. And the third one is a smart asset management. Let me tell you how they work together and why they exist in first place. So regarding the global liquidity aggregator, this is the gateway to exposure to tokens. We call this global liquidity aggregator because since we are based on Polkadot, the interoperability layer allows us to hook into all the available trading mechanisms. And in the background, we're able to create some form of a global synthetic order book. What happens with this component? It does 2 things basically. The first one is abstracts away the interaction with the order books. People do not have to learn how to use order book in order to be able to buy a certain asset. And the second, it gives access to all the DEXs. They're not all order book based, but it doesn't matter because in the background, based on what the user wants to expose to, we can route his funds and we can send orders in parallel so they don't have to worry. This is the first infrastructural component. The second one, we call this 1inch for yield farming because it's a smart yield farming aggregator. So what happens here is people currently like go on different websites. They want to yield farm there, they want to yield farm here. They have there's different mechanics of how to enter into it and so on. So what happens here is like we are integrating in the background all of those protocols and we are monitoring everything. This smart yield farming aggregator is powered by our analytics engine, which I mentioned earlier, which we have worked on for like over a year and a half. And what we do in the background, we scan the DeFi landscape in real time and we route the funds to the highest yielding pools. We don't really like own your funds. It's a fully non-custodial solution. And additionally, the Reef token and the Reef pool is deeply incorporated inside. So with the Reef token and the Reef pool, you'll be able to further compound your gains, the gains that you get through the yield farming. So this is the second infrastructural component. The third one, which is using the first one and the second one in the background, we call this Wealthfront for crypto. This is a smart asset management. It gives the average user access to a risk-adjusted exposure to DeFi activities and tokens through personalized baskets. So those baskets are powered by AI, by ML in the background, and they do automatic rebalancing and reallocation based on your initial risk levels, or based on your initial risk calibration, as well as the available opportunities. As you interact with the app, we learn from your actions as well as your portfolio history, and we can offer additional optimization and trade recommendations, which is fully personalized. Those are the 3 components which Reef is comprised of. The fact why we called it operating system is when you come to Reef, you don't have to go anywhere else. Like when you have like an operating system, you expect that you can browse the web, you can watch YouTube, you can check your email, you have Google Docs and so on. Why it's called Reef is, the coral reef is like the place where like all the sea animals meet. So you can see like from very like small fish to like whales and whatnot. So everything happens around the reef, and hence the name. So we're incorporating all the important building blocks of the DeFi landscape and we are putting them together. And then we're adding certain actionable things on top. So we're not just integrating them, but we have the analytics engine, which helps the user with decision making. It's like they get the augmented picture of the DeFi landscape.
That was very detailed, interesting, and it makes a lot of sense. It really goes to show the research you've done and the whole process you've been through. And so that's really great to hear. You mentioned that the baskets and what the system offers to the user will be personalized. So does that mean the user will have like maybe a slider for his risk? Like he wants to have a low risk, maybe a high risk. How will that work?
All of those complexities in what happens in the background, all the computation is completely abstracted away. So when the user comes on the platform, it's very simple to use it. You just have to link your wallet, and then you can choose. In order to get into a basket, you have to choose, as you said, with a slider, your risk levels, and then based on your risk levels in the background. So every time you move the slider, there is like a calculation is happening in real time in the background. So they're not like preset assets. As the landscape shifts, the assets are different. And then based on your risk levels, you will be able to see the composition of the DeFi activities and tokens that are offered to you. You can see like the allocation sizes. Below, you can see like the performance of this composition, like how it performed over time. You will be able to see the volatility. You will see like if you choose like high risk, you will be able to see like assets which are basically more volatile. If you choose like less risk, they will be like more stable, and then you will be able to see. And when you're happy with this, you can like get into this basket, and you can get into more than one basket if you want. You'll be like, okay, I want 30% of my assets to be in a high risk basket, 70% to be in a low risk basket, and then you'll be able to monitor your baskets. You will be able to see at which point you entered and how the composition behaved over time. When the system figures out that for your composition there is like certain update, you should like either reallocate or rebalance something, you'll be able to do that. You have to just click one button. Eventually, like as the system matures and people gain more confidence, this will all be automated. And then at any point in time, they can choose to liquidate one or more of their baskets. They liquidate their basket and they close their position.
The assets of the users will be liquid at all times.
Not all of them are just assets. Some of them are, let's say, lending. Some of them are like a route. Some of them is, let's say, like you get into Ether, you go into Aave, something happens there, you borrow something else and it goes somewhere else, like it's similar to Wi-Fi. So this is like, for example, one, cannot call it an asset, it's just one flow. If we offered you the composition, it means we have a route to get you in and to get you out of those assets. Otherwise, we wouldn't offer you like this composition. And then with just one click, you just get into all of those things. And then with just one click, you get out of those things.
Awesome.
The vision for this was, since we are interoperable, we are able in the background to have like infrastructure on more than one blockchain. So we will initially have on Ethereum and some side processing unit on Polkadot. We're building more infrastructure on Polkadot. We plan to like expand to Solana, be present everywhere, be present where the users want to be. And our end goal is you set your risk levels, you get a basket, and this basket, let's say 30% of the activities in this basket are in one ecosystem, 30% are in another ecosystem, and the rest are in completely different ecosystem, like completely different wallets, completely different like communities, different mechanics. Through Reef, you click like one button, and then we route your funds. And it doesn't matter if you come from Polkadot side of things or if you come from Ethereum side of things, we'll be able to convert your funds and route them through like bridges, and then you're going to get exposed to all of those activities with one click.
Awesome. It's a great way to diversify not only with different assets and flows in one blockchain, but through many blockchains, which helps a lot to hedge
Exactly.
the risk. I would be very curious, how do you in the background define a risk, right? Because I'm assuming generally assets that give more yield are more risky, but not often, and it might be very hard to say how risky a certain asset or flow is.
That's a great question. How we define risk, it's always like a work in progress. This is valid for risk in general, for everything. You can always like improve on how you define risk. But how we do this is the following. So we use different models. What's more important is what is the input of these models and why our output is meaningful. So what happens in the background, we are collecting three types of data. So we have three sources of completely different data. The first one is the pricing, the second is the volume, histograms, but the third one, which is very important for us, is the order book changes. So what happens is every time the order book moves, and as you can see, it keeps blinking all the time, We are basically getting the deltas between state number 1 and state number 2. So every time it blinks, we know exactly which additions and reductions happened to the order book and how it got to this state. You can imagine like different exchanges, they have different format of how they deliver this. Some of them do it like in real time with no delay through WebSocket. Some of them buffer the deltas every 200 milliseconds. So we have to like structure this data and standardize it. And what happens here is we're able to track like order books of different assets. And then based on how the order book behaves, we're able to grade the assets. And it's super easy to see if something is being like wash traded, if something is being manipulated. For example, for Bitcoin and for Ethereum, you have exchanges in different geographical regions. When certain price movement happens, we're able to see which exchange is leading this price change. For example, when certain price increase happens drastically, we can see, oh, this came from Binance and then Coinbase followed. How can we see that Coinbase followed? We can see how the order book behaved and how the market makers they removed liquidity from Coinbase so that the order book would just shift without them getting like arbitraged. This is how we process the exchange data.
First of all, I would love for you to publish some data on this, because like knowing which coins are wash traded or how it really works is very interesting. But secondly, this seems like a huge amount of data. How are you storing it, like integrating with all the exchanges, all the pairs, all the order books in real time? That must grow and grow the data you have to store very rapidly.
Yeah, so we use AWS in the background. We have dynamically scalable infrastructure, so we use Kubernetes and we use Docker, and based on the load, we are able to automatically like scale our system. The storage there is affordable. I can say it's not cheap, but it's affordable. We use AWS for most of our things, which are like highly compute intensive and bandwidth intensive. All of this is deployed there right now. So from the first data stream, which is exchange data, we are able to like extract certain metrics about certain asset. And then we are like, okay, what can we do with this? Yeah, we can do some trading, but can we do more? And then we took the second data stream. And the second data stream is blockchain traffic. So we run our own nodes and we collect a lot of like blockchain data. And as you know, blockchain data is not super structured. So you kind of have to pick exactly what you want in order to store it properly for processing. So what happens here is we come up with different hypotheses of how can we use certain data and what data exactly we want. How can we combine this data with the exchange data? So for example, we can monitor flows of funds in and out of exchanges. For example, like a few years ago, those Ponzi games were super popular, like P3D and whatnot. And we could see how they're growing over time, how many addresses are participating into this, even if it's not like a direct, in order to see like, someone can just split one address into like multiple. Eventually, if you go back, you will see that around 25% of this is one person. It all came from a certain exchange. You kind of figure out the distribution of the assets which were like locked into a certain like smart contract. Through this data stream, we are trying to extract different metrics for different things. So for example, let's say it's a pool. We can see like when the smart contract was created, what was the velocity of the funds flow, so how fast like they got to like 200 million locked of assets, how many addresses this happened. We can monitor at any point in time, like when they removed liquidity, how fast was this liquidity removed. All of those things have predictive mechanisms, right? That's the second data stream. And the third one is social media. So we scrape Reddit, we scrape Twitter, we run news through NLPs, again, to extract certain metrics. And then we can see like fear and greed metrics. We have our own, like, based on what people are discussing. Are they bullish? Are they bearish? We also combine this with traditional financial data, see if there is certain correlation. So for certain funds, this is what we've been doing. They wanted to see the retail investors' social media presence, how it compares between the traditional financial market and the crypto market. When certain thing happens on like Wall Street bets, if something is somehow correlated to crypto because some guys made money there through buying options and whatnot. So we like help them with this. Through this third data stream, we are extracting a lot of metrics. And now what happens, how our process works, is we have different hypotheses of how can we combine those three different data streams into a certain metric, or into like certain, for example, a risk would be one of them, right? What happens is, let's say it's a certain asset. If the composition is high risk or low risk, And let's assume that this composition has just tokens and pools. So if it's pools, we have like the blockchain data, how fast like funds flew when the smart contract was created, what are the gas fees compared to other pools and so on. And on top of that, we can see like the smart contract through Etherscan, you can extract some metadata, you can see like the pair, this and that. And then you can see, okay, let's see what do we have on social media about this pool. So for example, we have something like spaghetti or some sushi and so on. And since we're collecting like data, we don't just collect data from the moment they show up, but we have historic data as well. And with this, we can see at which point in time they started having social media traction. And then we pair this when the smart contract was created. We can see if like they pre-mined it. They were like, oh, there's no pre-mining, but you guys kind of knew before us, so kind of there is something, some form of advantage. If the smart contract was deployed like a few days before they started like social media, it kind of shows that, oh yeah, we know what you're doing. Based on all of this, we can set the risk. So if certain pool grew slowly over time, stable, there is no big outflow of funds, all the flow is like happening like over a certain period of time and slowly, we grade it as like a more stable or like less risky. And if something happened like overnight and the social media spiked and the velocity of funds flow spiked, we mark it as high risk. And regarding tokens, again, we have social media, we have order book movement, so we can see like, okay, this token is, it's risky because of this and that. But if you want to buy into it, you should maybe buy into it. And there is like minimum, like in order for a certain asset or token to even get into this composition, there's a certain minimum that need to happen. So you're not just gonna get into some random stuff. Certain minimum requirements must be fulfilled in order for those assets to be even considered to be part of the composition. Yeah, and those metrics are then put into different models, like different correlation matrices and whatnot. And this is basically our machine learning team, our data team is, keeps improving this, keeps adding more models and so on.
Wow, that was very interesting. It sounds like something very big in the background, right? Like gathering data from the exchanges, the blockchain, and social media to then have a model and be able to know what the risk is or make a prediction. So that's very cool. It sounds very exciting. It sounds like you know what you're talking about. You got some great people around you. You have a great analytics team. What stage is the product about? When will people be able to actually try it out?
That's a great question. So regarding all of the development side of things, there are like multiple tracks, some of them being the analytics engine, which I mentioned, which is currently being fully adapted for DeFi, because as I mentioned, was like more like general purpose. Now we are just adapting it just for DeFi. On the other side, we're building a lot of smart contracts, a lot of like Solidity code for the infrastructure, integrating with all of these different protocols. So there are multiple tracks happening in parallel. But to make it short, we are planning to launch the initial version of our product next month, which is in October, most likely at around the like either the third or the fourth week of the month. At that point, it's going to be like the first version. The way the first version will work is not just because we don't have more things, but we kind of have to slowly get the users into something and then like slowly add more things on top. And with this, we can even build ourselves confidence in the system. And in order to get to the point where we want to get, it's an iterative process, and we need the users to validate what we are giving them. Yeah, so the initial version will be end of October.
Right, cool. And that makes sense regarding the iterative process. What is the token useful for in the ecosystem?
The token has multiple use cases. First and foremost, it's a governance token. People will be able to vote on certain things, on different like parameters around the whole system, as well as they'll be able to vote on different proposals. We are working on releasing best practices. How can people like create their own proposal? And it doesn't have to be just for like the blockchain side of things. It can also be for the UI, so designers can also like post the proposal themselves. And the governance token is super important here because it kind of drives the iterative process. So it helps with the direction. It's a great mechanism to validate what users want. Second, it's powering our infrastructure, so you'll be able to pay protocol fees with it. So every time you interact with the basket, you readjust your risk, you get into another basket, you liquidate certain basket, rebalance needs to be triggered, certain protocol fees occur.
Do you already know how expensive that will be? Will that be a fixed price in dollars that will then change in the amount of tokens depending on the price of the token? Do you have some idea about the price that's going to cost?
The protocol fee can be controlled by us because, for example, if it's on Ethereum, you have to pay the gas fees anyway. But the Reef protocol fee, it doesn't have to be paid in Reef. It can be also paid in Ether because we don't want the users to have Reef token in order to be able to use our platform, so they can just come with Ethereum. So we can preset this. And this is another thing that the community can vote on through the voting. Initially, we will set it ourselves. We'll publish why and how and whatnot, and then we can vote on it. We can even, if people want, we can eventually even remove it. But it's like one income stream that goes through the Reef pool, which I can tell you more about the Reef pool. The token can also be used to stake into the Reef pool and get Reef pool token shares. Through this, you are exposed to the yield. But also the token is used in the yield distribution mechanism. And the yield distribution mechanism happens in the basket engine. Let me now explain the three income streams that the Reef pool has. When we were designing the Reef pool, first we took a look at the landscape. We were thinking about the sustainability. Certain pools that offer like super high returns, they are not sustainable over the long run. It's just impossible. The Reef pool has three income streams. The first one comes from the basket engine. So when the user gets into the basket, they can monitor their position. They can see the yield, the profit that they generated. And when they choose to liquidate it, what happens here is there is another slider which says, okay, now you have to choose like the payout ratio of the yield, not of the whole like position, but just of the profit that you earned. There is a payout ratio between Reef token and Ether. Let's say, again, this can be the minimum how much you have to take in Reef can be readjusted through voting. But let's say, for example, you have to take between 10 and 100% in Reef token. The more you take in Reef token, the better terms you get, which means we get to keep between 10 and 100% of your yield. What we get to keep, the smart contract directly, all of those funds go to the Reef pool, and basically through the Reef pool, indirectly to the Reef pool shareholders. So that's the first income stream. Eventually, we can vote if we should have treasury. So not all of the income streams should go to the Reef pool. Maybe we should like keep certain amount of the revenue in like a reserve, and we can like fund. We can give grants. We can do buybacks. We can like again, the community can vote if we should have treasury and what should we do with the treasury. The second income stream I already mentioned, the protocol fees. Every time you interact, all of those fees go initially to the Reef pool, so the Reef pool shareholders get it. And the third one, it's quite interesting because it came from our experience with delegated proof of stake and how inefficient was the voting there, how like passive users did not even bother to delegate voting power to the active users. I mean, we did it ourselves. Like when certain things on EOS had to be voted on, we just didn't bother to delegate voting power because we felt like I don't have enough voting power anyway. So why should I even delegate it to someone? Because if I delegate it to someone, he won't even care. And then what happened is like only like 20% of the network voted, 25% of the network voted, which was super inefficient. So in our case, the passive user can just stake his tokens, while the active users, they'll be able to use the tokens locked into the Reef pool to leverage their voting power. So they can borrow tokens from the pool to increase their voting power. And if they do that, they'll have to pay interest to the pool. This is the third income stream. This is basically how the three components are tied together with the Reef token and the Reef pool.
Since we're talking about revenue, can you tell us how much you've raised? Maybe if you want to mention some of the big investors, do you have a plan for a public sale? How did the fundraising go?
We raised $3.9 million. Some of the important investors are, we actually have like interviews published with them on our Medium. So you're able to see like how they got to know us, why did they invest. So we have like NGC, we have QCP, we have Woodstock, we have LDCap, we have Kinetic, we have Bitcoin.com, and probably like 10 more names. Those are the biggest ones. Yeah.
Do you have plans for a public sale?
Yes. So we are currently like figuring out how exactly we should conduct the public sale. We will announce soon exactly how it will work, if there will be like whitelisting or not. We're still in the process of making this decision. We will publish when we are done with the decision making. We will publish this in our Telegram group as well as the Medium.
Do you want to talk maybe about some of the partnerships you have? I've seen that you've partnered with Bluezil and Chainlink.
Regarding the partnerships, the nature of this project is all about composing and integrating on top of the ecosystem. So how we see this is like there is this term called financial primitives. And what financial primitives are, those are the building blocks of the decentralized finance ecosystem. Those are technologies, they exist on their own, they can be used together in order to create something larger and more complex. For example, in the traditional financial world, you have like banking system, you have like payroll, borrowing, you have different institutions, but those together are basically forming the centralized finance. And what happens here, since the nature of Reef is all about taking all of those building blocks, combining them together into something greater than the sum of every individual part, that's what we're doing. And we just started with the partnerships. Those are the projects that we initially need. For example, we use Chainlink. We need oracles both on Polkadot side of things as well as Ethereum side of things. So there's a lot of data that we need to inject into the smart contracts. And then, we also have a partnership with Plasm. Plasm is like a parachain on Polkadot. This is where we are launching our initial like side processing unit. We have just started with the partnerships because we believe that we have to just focus on what we know and what we do best, and then use basically the existing ecosystem, the existing projects, all of the available building blocks in order to accelerate our development. And that's why we are partnering. We are utilizing other projects in order to be able to output what we want, what is our basically deliver on the vision.
I'll have a more general question for you. Do you have an opinion on where crypto will be in 2, 3, or 5 years?
Yes, that's a great question. So how I see this, I have to give the parallel in order to explain my opinion. I have to give the parallel of the traditional financial world, how like those things were like moving in parallel, and what happens right now. If you take a look how the traditional finance innovated versus the decentralized finance, it's uncomparable. What happened first is, since crypto was still too early, projects took a lot of things from the traditional financial world, like, oh, we need this, we need order books, we need a traditional exchange. There was already a lot of work, a lot of infrastructure built there, which could be reused here. And what happened at some point, those lines kind of like reversed. So what happens now, the innovation is happening here. The reason for this being is that people saw that they could build decentralized things here, they could build more sustainable, more transparent systems here. As we've seen with what's happening right now, people are all about like transparency, like central banks printing this, that, everything happens behind curtains. And the people who are able to innovate anywhere, they choose to innovate here. The most innovative people are in this landscape. And not just that, very important people which had like very, very high functions in different investment banks, they moved into this landscape. So those are super important signals. It takes some time to get into the main market, into the main retail market, but I believe we will get there. And like in 10 years, people will just not even discuss about centralized versus decentralized, because it's just going to be decentralized. It's the way, our kids will be like, oh guys, you really like had that, this really happened to you, how could you let the banks do that, how could you let them charge or keep your money for 7 days, or how could you let them, you put your money in a pension fund, and this pension fund puts your money into investment bank, and this investment banks put your money into a hedge fund, and then they like kind of gamble with your money, and you don't know what's going on. You don't see the flow of your money. You're like, yeah, it's somewhere doing something. In this world, everything is very visible. You have overview over what's going on, how your funds are managed, how your funds flow. And this industry will just mature even further. Yeah, I think this is the future.
Do you have some time to read? And if so, do you have any books that you've read recently that you'd like to recommend?
Sure. Yeah, I love reading. Now with all the things that happen around Reef, I managed to listen like 40 minutes of an audiobook like yesterday. I can even post 10 books that I think people should read. So I mostly read on finance. I read from value investing to how like leveraged buyouts happen, what's happening in the background, like balance sheets, how our companies consolidated. So I first started initially with just I wanted to understand like how the whole economy works, what are the moving parts, how the economic machine works. And then I just kept reading like more and more advanced things. I can send you like a list of a few books. I can order them by how advanced they are, where one should start first to learn about how to manage your own finances, how to shift your mindset about money, up to a point where you are learning about like consolidating balance sheets and modeling acquisition, like how one company can merge and acquire another company. So I can send like around 5 to 10 books that people can and should, I think, read.
Yes, amazing. I'll put that in the description. I'm very curious myself, and I'm sure many people will find that useful because it's hard to know where to start sometimes, and it does seem overwhelming. There's so much to know that people just they don't start because it just seems like too much. So if you have a guided process with some very basic stuff at the beginning, that's great. Is there anything else you'd like to mention? Is there something about Reef that we haven't covered? You want to talk maybe about your plans for the future?
What I wanted to say is right now the community is interested just if the project is only like fully decentralized. But I believe, in order to get the whole industry to the point where it's going to be suitable for the masses, we might have to add certain like centralized things, because why I'm saying this, we need this transition. And people like we're currently siloed. On one side you have centralized things, and on this side you have decentralized things, and the transition cannot just happen overnight. You can't just jump from one thing to the other, so it has to be like a slow transition. Some of the infrastructure that built into the traditional financial system is super important in order to be able to onboard the users. What's our vision with Reef is basically, everybody knows Robinhood. So when Robinhood came on to the market, what they did is they abstracted away all the complexities of interacting with the order book. You open option chains, you open the option chains on interactive brokers. It's super confusing. They completely abstracted that away. The user doesn't have to learn how to use any of these. This is what we're aiming with Reef. And our end goal is to be able to fully onboard a user who comes to the platform with just a credit card. So we want to add fiat gateways so we can onboard new users. And our end goal is to get completely non-crypto user. Based on their knowledge, we can even change the UI based on what they know and what they don't. And we start with the credit card. It goes through like certain fiat gateways, and then he's choosing his risk levels, and he gets into like 3 different ecosystems, exposed to different DeFi activities in 3 different ecosystems with one click. Yeah, this is our vision, and I think it's very comprehensive of what we want to achieve. There are like parallels in the traditional financial world of what we want to achieve. We hope that the users will love this app. We hope that we will be able to establish a feedback loop with the users, so we will be able to listen to what they want, so we can iterate and move faster. And yeah, we plan to make this a reality.
Awesome. So when's the partnership with Visa and MasterCard?
Coming soon.
All right. Cool. Thanks a lot for your time, Denko. I really enjoyed doing this interview. I'm looking forward to the launch of Reef and trying out the platform myself.
Thank you, Alexandre. Glad to meet you. Thanks for your time as well.